Now, we'll get straight into it because we've had some big moves over the last 24 hours, particularly on the crude oil market. We saw oil soar 6% yesterday as OPEC have now reached a deal to limit output. And with that, it's the first deal since 2008. And I thought what we could do is we could have a look at some pre-analysis that we've done of where oil was at the beginning of this week. We've been discussing it on last week's session as well, and then we'll have a look at where oil is now and where we expect it to move going forward as well. So with that, guys, any questions, any comments, do keep those coming into the chat. It's certainly been a busy day. There's been a lot of news items coming out today, and we just really want to break it down for you and focus a lot on oil here because, as you can imagine, at the Gold and Silver Club, we have been inundated regarding oil over the last 12 hours or so since the OPEC decision has come out. So with that, we'll start off here. And I've got a before and after chart. So let me just show you the current chart of oil. This is the current chart, okay? So the 6% surge that we saw yesterday, and this is the before. So let me just take you back to the beginning of the week when we were putting out our forecast for where we expect oil prices to go. Now, there has been a lot of anticipation for the OPEC meeting this week, which has been going on from Monday through to Wednesday. And what we saw was the price was getting tighter and tighter. We formed into a pennant here. We were forming higher lows, but also lower highs, which is very typical right before a major news item. And what you look for is the price to get tighter into that apex at the edge of the pennant, and then we look for a breakout, and the catalyst for that is often a major news item. Now, we've been fortunate over the last week in that we've taken some tight entries prior to last week's FOMC statement when we had a revisit of the lower end of the trend channel, nice supportive zone, and we got quite an early position on here with oil where we were able to put ourselves in a position where the trade was risk-free. We were able to move our stop loss, so we'd actually secured points prior to the OPEC announcement. So we were guaranteed points in either way, but obviously we'd get more in terms of profits if the price was to continue to break out to the upside. So we've had a pennant formation over the course of this week, and ultimately we were looking at two major outcomes following on from the OPEC meeting. So if we were to see a cut, which is exactly what we have seen, we've seen the first cut on oil outputs, the first deal since 2008, we were expecting a bullish move, a breakout to the upside, ultimately breaking above the pennant and making a move back towards 49 to the 50 zone on oil. And currently we're about 47.50 right now, and it's had a reasonable breakout. It's moved over 250 points since yesterday, 6% move in one day. On the flip side of that, if there was a failure to have any sort of agreement of that meeting, there was downside risk for a revisit of $43 a barrel, and then below that could even drop to $40. But we've seen the outcome of that has been that it's the first deal which has been reached since 2008, and with that we saw a big breakout to the upside with oil yesterday. And now coming into the market now, if you don't have a position on oil, we're getting this question a lot. What can you look at? What are the next steps here that you could take advantage of with oil, given the news which has just come out? Okay, so I will bring it onto the chart. So just have a look at this quickly before. Okay, this is what we're looking before at the beginning of the week on Monday, and this is after. Okay, so you can see where we've surged now from the lower end of this trend channel. We've now moved over just shy of about 360, 370 points. It's been a 6% move here on oil. We've broken out very firmly above the pennant formation just yesterday. And we've had a strong close here. Oil, WTI, or light sweet crude oil, has had a strong close here. It's broken out of its resistance channel, and there is really clean air for oil to continue this move at the moment. We're only really getting started with the US session. Currently, oil is sitting at $47.35 a barrel. Now, I talked about this on a previous webinar that we did actually earlier on today, and I think it's noteworthy that when you get, so I just want you to just bear with me now. I'm just going to talk you through a formation on the chart. When you get a bullish candle like this, and this is one of the strongest one-day moves that we've seen on oil over 2016, there's been quite a few big moves to the upside like this, but you really want to watch out for the potential follow-through of a candle like this. I can highlight a few to you, especially if it turns out to be a three white soldiers formation, where you see 3 consecutive days of very strong gains. Now, at the moment, there's speculation that we're seeing profit taking this morning, that the deal might not be as concrete as originally anticipated. So we're seeing a little bit of decision around this level at the moment, the highs of yesterday. Now, typically when you get a very strong candle like that on a daily chart, you want to then see the following day whether we will get some good follow through. I can see it's developing at the moment. Previous resistance level is becoming support. We found support, the 100-day moving average, a pivot here. Also, previous trend channel is providing support. What you want to see on a very strong candle like this is a retracement to no more than third of the upper end of that previous candle, okay, which is what we've got at the moment. You don't want to retrace more than that. If you start to see a 50% retracement, or in fact, if you start to see a retracement all the way back down to the low of the previous day, that's not good. It's known as a railroad, and you can see the price start to turn around, give back its gains. But if you only retrace within the top third of that candle, which is what we're seeing at the moment on oil, as long as we only retrace slightly, get some profit taken at that level, then you go for a break and you break back above the daily high, the previous day's high. That is where we start to see another day of follow through on this formation, okay? And then you would expect another strong day, and you could get another bullish day, bullish engulfing candle. Well, not a bullish engulfing candle, but certainly it'll be a bullish candle where you see the potential for a development of a three white soldiers formation. What does a three white soldiers formation look like? It looks like this: very strong candle, 3 in a row. You get this a lot on oil. You get a reversal, and then you get 3 days of very strong consecutive gains. And it's something to be noteworthy if we do really start to see momentum pick up in the oil markets. What we could get is, especially, we're only really getting going here. We're currently sitting at 47.42, which is more or less the highest it's been in since the start of the UK session this morning. So I'll be looking out for that, for the potential for oil to then follow through, break back above the previous day's high here, and as long as it only retraces to the top third of this, then we could really get going. And I'd be looking for a revisit then of, first of all, 48.40 is the next target zone that we've got. We've got oil positions which have been on since before last week's FOMC statement, so we're continuing to ride this trade. We've moved up our stop losses as well, so we're guaranteed profits, but this has worked out very well for us from our existing position point of view. And if we continue to see follow through here, we would then, beyond this level, 48.40, I would look for a revisit then of the 49.40 zone, which was the high going back to August, where oil rallied 23%. And then beyond that, I'll be looking for a revisit of the 50 zone. So right now, it's looking good for oil. It's had a strong close yesterday, a 6% gain in one day. You might think, okay, isn't oil a bit overbought now? It's overdone. Well, we've just broken out this pennant. We've had a very strong close, the strongest close in over 3 weeks here. And if we do get some follow through today, we could really start to see momentum pick up to the upside, just from the fact that we've had so many inquiries over, really, since the Opec decision yesterday, over the last 12 hours. We know there's a lot of traders looking at this at the moment, looking at this potential oil position right now. Not just oil, they're looking at stocks as well, oil stocks, which could benefit from this OPEC decision. Okay, so it is historic in that we haven't seen a decision like this, an agreement and a deal like this, since 2008. So we're watching this very carefully. So I want to put that on your radar. We've got positions on. Now we're just managing these trades. What could you look at for a fresh position here? Well, in terms of this current move right now, I would look for certainly potential to break above yesterday's high and follow through. Ideally, if you're looking for a fresh position, and certainly those of you who watch our weekly reports at the Gold and Silver Club, you'll know there's been an opportunity to get in on this breakout of the pennant formation. Once we've broken above the weekly highs here, this breakout trade so far, which is moving well. So ultimately, we're looking for follow through here at the moment with oil. Now, I don't think, if there's any other questions on oil, do put those into the chat, but I definitely just wanted to cover oil with you first. And again, for those of you just joining a little bit later on here, I'll just go back to the example. This is how oil looked at the beginning of the week prior to the OPEC decision. Okay, this is at the beginning of the week on Monday, where we were putting our forecast forward for what we expected to happen next. We were building a pennant formation. If you trade commodities, you need to be very aware of the formations which develop in the market. This is a classic formation before a major news item. So you get, the market just gets tighter and tighter. It consolidates into a pennant, and then once the news is essentially broadcast, and once we get a decision, you then see a breakout of that pennant. And this time, because it's been a bullish news item here, we've essentially seen a breakout to the upside, hence a 6% move on oil in one day yesterday, this breakout to the upside. Okay, good. Right, so with that said, let's move it over to silver and also with gold. Silver and gold I find interesting because we've just had a number of US data items come out, including GDP, and gold and silver have hardly flinched. They've hardly flinched since where they were this morning. They were pulling back earlier on this morning, but we do have some major trend channels. You would have really expected on the back of that data earlier on today to see some sort of sell-off, larger sell-off on gold and silver, but they are holding on to key support right now. You can see the same situation that we've had on oil. Gold and silver, they're developed pennant formations. You've got higher lows, lower highs. You've actually on a much higher time frame, you've got the pennant, you've got the potential for a bull flag formation here and a breakout.